extraordinaire David Cordier, who slept in late and screwed up Dwayne's show. But we are going to make it better because I'm here now, and we're going to make it better. So let's get this show on the road, baby.
What's cooking, Gumbo Nation? You're listening to Mortgage Gumbo with Dwayne Steiner right here on iHeartRadio, and I'm your host, Dwayne Stein, the Gulf South Mortgage Authority. This is your home show, 9+ years providing education and options on what is or will be your largest investment and most valuable asset, your home. If you're new to the show, welcome to the Gumbo Nation. If you want to join us, 504-260-0995, or you can shoot an email to info@mortgagegumbo.com. Home away from the show also is mortgagegumbo.com. Dave's being hard on himself. Hey, he's playing pretend there. Always technical difficulties. That's the beauty of live. Appreciate them getting a little bit of last week's show in, but super excited. And gosh, listening to that last week, you could tell who knew I was playing hurt. I had a 103-degree fever, was not well, but much better this week, and super excited, Gumbo Nation, to be with you. This week we had a lot. I told you last week we were going to be having some ADP numbers were coming out. The BLS, which we know is affectionately we call it, and you know this, and if you're new to the Gumbo Nation, the BLS reports, the Bureau of Labor Statistics. I removed the L, and what does that give you? Just BS. And that is normally what this report is. But this week we're going to get into exactly what came out yesterday. And you probably hear a little pep in my step because finally, the covers are being pulled back with these jobs reports. And it's not time to take a victory lap. It's not. But we've been advising on what was going to happen, what the numbers needed to be. And they came out yesterday, so we're going to share that. So this show here, we are going to be explaining the things we've been looking at. What is affordability? And when we do our Rate Watch segment in a little bit, you're going to hear how much money you've gained since the peak of interest rates just last October. Just last October. And then do you have a FHA loan? Do you have a VA loan that maybe you purchased within the last couple years? Then right now is the time that you need to be getting your paperwork out and going over to mortgagegumbo.com or to reach out or go to snapsendandsave.com and click on refinance. And we're gonna go over what the benefits of both of those programs are and why right now, with these rates plummeting, it may be time for you to start considering these programs. So we're going to go over what some of the pros and who qualifies and all of that fun stuff, as well as, like we said, affordability. But again, finally, and sometimes it just takes time for you to, and I'm not an I told you so type of guy, but what have we been saying? The data does not lie. The data does not lie. And all last year we talked about how, man, they made up these jobs. They kept making up and manipulating these unemployment numbers. And sure enough, it came out. 750,000 more jobs were created last year, allegedly. And then when the real numbers came out, and they were doing that, why? Because they wanted to try to push to lower the rates in the beginning of the year. But then they couldn't because of what was happening with the economy. It wasn't showing that. Well, now more than ever, the politics are coming into play and them wanting to lower rates and do different things. Well, now all of a sudden, see, it's a double-edged sword for Powell right now. Because unless you've been under a rock, you see what the other party has done. They've basically thrown out the sitting president. And they've put in, and I don't care what your political beliefs are, it does not matter. Just vote. Otherwise, you really doesn't matter what your thoughts are if you don't go hit the ballot box. But so they've got someone new. So they're trying to promote, right? And this is going across their sort of thinking. Because what you're not going to hear anymore, the victory laps, the Bidenomics, all that, you're not going to hear that right now. Because now these jobs reports, the Fed could no longer, the cat was out of the bag, pulled the covers back, what all those cliches are. You hear me talking about Cinderella, what happens after midnight. And at the end of the day, ADP this past Tuesday, and it was 122 jobs on projected for 175. Jobless claims were way up. Continuing claims, which means I got to keep reapplying for unemployment, was up another 33,000, up to 1.877 million. But that's ADP. There's a million of these reports, right? And the reason why I'm giving you this is, what do? We give you the why, because I'm going to explain when we get in a rate watch why and how great all this stuff is. And so yesterday, we got the BLS report. And they were expecting 185,000 jobs, Gumbo Nation, and they got 114. Throw in another 29,000 jobs they've adjusted over the last 2 months, and you are looking at a labor market that has dried up. And we feel this. You know who you are. Maybe your hours are getting cut. Things are expensive. The only people hiring right now, and we've talked about this, when you go break down, go look at who's hiring. It's the government. That's not how it's supposed to be. The government's not supposed to be all the jobs. So what you now have is the reality and the facts that the pain is out there. In the private sector, those businesses, what have we been talking about as well? Commercial real estate. Why is it faltering? Well, people can't pay their bills. Small businesses, private sector businesses can't pay their bills. Restaurants are going down. When you see McDonald's had a loss for the first time, I think, ever in Q2, reporting losses, McDonald's. And we all remember the 79-cent Big Macs. And now, yeah, it's up to $8 and all that, but it's still McDonald's. That's not good. Amazon, losses. Apple, all these gigantic companies, losses, layoffs. And I kept telling you, I don't understand how when Google, all these companies are laying off, how are our jobs not there? Well, now we're seeing it. And what's the number I told you, folks, Gumbo Nation? I advised you on this because I read what you don't, so you don't have to, and listen to these boring conferences and go see with these Fed presidents. And 16 out of 19 of these folks, even though 12 of them are the only ones that vote, all had 4.1% as the and I told you, if we went above that, there was going to be a problem. Well, guess what? Unemployment jumped from 4.1 to 4.3% in the month of June. I'm sorry, for July. So what that tells you is this is the highest we've had since 10 of 21. See, now you're going back when we were right in the midst of the pandemic, right? So now you've got all these things that are happening. And the Fed said it. They said it years ago. And I kept saying the canary in the coal mine was unemployment. I kept saying it. And for those who have been on, you're like, you know what? You're right. I've gotten text. I've gotten things yesterday, emails. Hey, man, you called it. Look, we're not taking any victory laps right now. The reason I'm excited is for you, the Gumbo Nation. Because I know a lot of you. I talk to you every day. And so many of you are holding on to that 2.5%, that 4% interest rate on your mortgage like a badge of honor. When in reality, you're struggling. 1 out of every 5 mortgage holders that are 90 days delinquent right now, it's because of excessive obligations. And you know why? Because you don't want to refinance to help yourself because you're trying to hold on to a number on a piece of paper. Well, now, with these numbers falling, some opportunity may be there. And we're going to get into, hey, what does the Fed cuts really mean for mortgage rates? But I could tell you what this jobs report means for the Fed cutting. We told you, started telling you over a month ago they were going to cut in September. And 25 bips is a guarantee. Start looking at 50 bips. And for a federal funds rate right now, that's between 5.25 and 5.5. You're looking at getting down to 5. And now you're looking at 2-3 cuts by the end of the year. And why? Manipulation? Who knows? But this is what we've been telling you. They could have, we kept saying you, and it's a hockey term, right? You go to where the puck's at. You don't go to where the puck's at. You go to where it's going. And we kept saying, Fed, what are you doing? Quit manipulating. And now we're seeing what happens when that, and look, the Fed funds rate is going to come down. And I told you we did not need the federal funds rate for mortgage rates to start seeing relief. That's all we've been talking about, Gumbo Nation. And if you're new, hey, go to YouTube, go to Mortgage Gumbo, go to GumboNet, go find previous shows, and you will hear me talking about this. It was all about the labor market. And we did not need the federal funds rate to lower mortgage rates. And that got proven yesterday when they had to come out and that report came out and unemployment jumped 2%, folks. 2%. Not 2%, 0.2 from 4.1 to 4.3. But that's gigantic when they use 1/100%. Because if they could have said 4.29, that would have been 4.2. So let's get into our weekly segment we like to call Rate Watch so I can share with you what yesterday meant to mortgage rates. All right, just last week, and we were excited because we were staying steady, under 7%, right? The whole month of July, we were under 7%. Last week, a 30-year conventional was 6.86. Today, 6.40. This is a one-day change. And the financial impact that will have for you if you're looking at purchasing a house, the amount of affordability, and we'll get into that in a second, just increased tremendously for you. If you're struggling to pay those bills from a refinance standpoint, it just got easier, and the amount of savings just went up drastically for you. 15-year was at 6.30. A 15 years at 5.89. FHA was at 6.32. That's at 6.10. Jumbo, 7.04 to 6.68. And a VA went from 6.34 to 6.12. But the 10-year Treasury went from 4.241 to 3.79. A 70 basis point fall. And this is what, Gumbo Nation, I want you to understand why. Mortgage rates follow inflation. They do not follow the Fed funds rate. That is what's making the headlines. That is going to help you when it comes to your, maybe those credit cards, student loans, auto payments. What will you see when they anticipate that the Fed's cutting rates? Well, you'll start to see those 7-year terms for 2.9%. Just start watching car commercials. When you start seeing auto commercials and all of a sudden it's 60 months, 72 months, 2.9, 0.9, that's how you know the Fed. See, that's been gone for the last year and a half. You might have saw 0% financing for well-qualified buyers, and the fine print was 24 months. Well, see, now the long term's going to start coming back. Because what this is going to mean is it's going to be cheaper for banks to lend you money when the relief of what the Fed funds rate, what banks lend to banks, short-term rates, when that gets lowered, you're going to start to see that relief. And this is a gigantic win for you, Gumbo Nation. Gigantic. So for those, hey, you've been sitting on the sideline. I want to wait. I'm not sure. Last October we came in and the rate was on a 30-year was 7.97. You compare that to today's rate of 6.40 on a 30-year conventional, you picked up $50,000 in buying power. That means when I'm pre-approving you, you can now go look at, if you were looking at that 175, now it's 225 or more. The 300's 350, the 250's 300 or more. That is a tremendous difference. And this is why, again, you need to be prepared. Because now buyers are going to come out. And listen, we haven't even talked about yet, the changes. If you are a buyer and you are considering buying, you need to know what the new rules are that are going into effect August 17th. Because if you have a realtor that doesn't understand, you can miss out on opportunity. So if you want to know exactly what's happening, heck, if you're a realtor and want to know, we're having an event on August 14th. Go to the Gumbo Nation. But if you're a buyer, even more reason why Mortgage Gumbo's here for you, to help you out, to explain to you how we're going to help buyers. But now what has happened is it is a tremendous, a gigantic win, and this is opening up opportunity. Now, there's ebbs and flows. We talk about this. It's not going to be a free-for-all when it comes to mortgage rates. Because what you're going to have now, right now, as I do this show, these Fed presidents are getting phone calls from their local politicians. And everybody likes their 15 minutes of fame. And they're going to start coming out, and they're going to start saying things. Oh, we should cut. Not sure. We need to be a little patient, depending on what pressure they're getting. So you're not going to see this free-for-all. And I want to be clear, this does not mean rates are on their way down to 4%. No. But it's giving that relief today. It's giving you an opportunity today. And then as we follow the inflation numbers as we move forward, then you will see that relief. And then this is where, again, you want to make sure if you're buying or refinancing, this is where, again, you want to be strategic in what you're doing. Is this next move the forever move? Is this, hey, I just need relief now? That's what my refinances are saying. Get me out of this situation now. They've looked in the mirror. They understand that the 2.9, the 3.5, the 4% is not helping them put food on the table, is not helping them pay tuitions, is not helping them keep lights on, keep toilets flushing. And they're like, help me. And the excitement for me is when you see this now, there's that much more help that's there. So for some of you who are going, hey, maybe your situation's awesome. And you're like, hey, what's the big deal? Kudos to you if this is not the big deal. But for a lot of clients listening, across the country right now, 90-day delinquencies, right at 20%, is because of excessive obligations. Everybody got caught, so to speak, with this. When you raise rates 11 times in 16 months, everybody got caught and hammered by this. And now you're going to have sides fighting over, is it a recession? Soft landing? That stuff's going to go away. So are you ready? Are you prepared if you're looking at buying, finding out, hearing, okay, gosh, find out. There's no cost or obligation to see. But you're going to have to be more prepared now than ever, especially as a buyer. Because you will not be able to go see a house moving forward August 17th if you're not pre-approved or you have not signed off saying that you're willing to pay for that buyer agent to show you a home. That's right, pay. That's why you need to get with Mortgage Gumbo so I can explain to you and show you the benefits of working with us. Because the rules are changing. And it's always the perfect storm, right? Lower rates, now what? Oh, we've got this. But this is a good thing. So the Fed cutting rates, hey, you'll see a little bit of relief. Now, hey, with the Fed cutting rates, what's going to happen to those CDs? Well, they're going to go away. And not go away, but you're going to see less offers. Maybe shorter terms. Not paying 5, 6, 7%. Now, some of you may have went, hey, I'm going to do an 18-month at 6%. Hey, cool. You're locked in as these things fall. Some people who like to do this but maybe need a little bit more access to cash or something like that, maybe they're doing shorter terms. Okay. Well, now you're going to see these CD rates are going to come down. You're going to see them come down. And again, not all at once, but this is what happens when the Fed cuts those rates, right? But the money that banks borrow from banks, it's going to get cheaper. So there's not as much profit in there, right? They can't give you as much back to try and get your money in. So mentioned earlier, and want to talk about mentioned earlier about FHA streamlines and VA IRRRLs. And in our final segment, I want to get into that to discuss with you why those are some things you may be wanting to consider right now. Hey, we got a segment left. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, 504-260-0995.
All righty, let's see. I got Jeremy.
What is up, Gumbo Nation? Hey, hanging out with you here during the break. Tons of things going on, getting tons of text. Hey, reach out. Listen, the home away from the show. Snap, send, and save.com. Or go to mortgagegumbo.com as well. If you've got an FHA loan, a VA loan that you've done within the last couple years, some immediate relief may be there with their streamlined programs. We're going to talk about that a little bit when we come back from the break. But there's some opportunity. Been sitting on the sideline wanting to know, hey, should I purchase? Your affordability has gone up tremendously. Heck, it's gone up over 25 grand. You're looking at 15, heck, about 10, 15 grand just in the last week. But off of the highs last October, over $50,000 more in house you can buy right now. Minimum. And that's before we start doing discounts and getting folks into the fives. Fives! So lots of opportunity. Highly recommend, listen, if you want to stay up to date on things, go over to mortgagegumbo.com. Click on the Root. That's our weekly newsletter. Goes out to about 15,000 folks. Experiences between a 30-40% open rate. We talk about these things. We give updates. Help out with our Total Home Authority members when they've got some different things going on. Already got a couple texts, and I see some stuff coming across about the buyers. Yes, the way folks buy homes is changing big time on August 17th. Big time. No more waking up and just heading out. Let's go look at houses. There's going to be requirements now. You're going to want to protect yourself. So make sure that you are looking out for yourself. In Mortgage Gumbo, we can help you with that. Another place you can go home away from the show, Mortgage. Go to YouTube, type in Mortgage Gumbo, subscribe there. Over 650 videos for you to educate, options, all for yourself.
All right, 30 seconds.
All right.
All right, here we go.
Yep.
All the way to the top.
All right, welcome back. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. Home away from the show is MortgageGumbo.com. I know we're slamming in a lot of information. Hey, join. We got dozens on the stream right now. And for those who maybe picked up a little bit of the first segment, hey, we had some technical difficulties. That's what happens with live radio. But what a great day. Rates are plummeting. Rates are falling. That means you are winning, whether purchasing or refinancing. Absolutely. So I want to touch base, and we'll get back on this on another topic, or I'll put some stuff out during the week as well. Next week, we're going to have Total Home Authority member, Florida Lead Law and Title owner Jeff Lessishare is going to be in office. He's got a estate planning event coming up, but we always love having him on, so he's going to be in studio next week. But let's talk about if you have an FHA loan or a VA loan, and if you have an FHA loan that you purchased in the last couple years, let's discuss some of the benefits here. And number one, who qualifies? You must have a current FHA loan. You can't have a conventional and want to go FHA because the rate's a little lower or something like that. But what you've got here is the benefits that you've got is, number one, we can look at lowering your rate. That's number one. It's easy to qualify. There's a non-credit qualifying option. So you get access to these now lower rates. You can lower that mortgage insurance premium for some folks. An appraisal's not necessary on some, depending if you go credit qualifying or not credit qualifying. Income, credit scores may not be required. So if you kind of put it all together, hey, you could be out of work, have no income, have shaky credit, and no home equity, and yep, you could still qualify for an FHA streamline. That's the relief that some of you need right now, and I get it.
2 minutes.
So let's talk about that as an FHA, if you're an FHA loan holder right now. For our veterans, you rock. The VA IRRRL right now is something you truly, if you purchased in the last couple of years, want to look at. And it's not after a captain or a colonel, IRRRL, a name. It's interest rate reduction loan. IRRRL. Now, your eligibility here is, hey, you've got to have a VA loan. And what is beautiful about this is no income check. We've already started reaching out to our VA buyers. No appraisal. No credit check. And we can lower that rate for you and let you reset your mortgage. And that's what I want you thinking about if you purchased FHA VA. Now, refinances are now showing themselves as an opportunity with this gigantic rate fall, even a conventional loan.
30.
All you got to do, folks, is go to mortgagegumbo.com, click to speak with us so we can look at no cost, no obligations, just answers for you. Follow me on all the social media sites. Just type in Mortgage Gumbo, Google it. You'll find me. And let's get you the answers you deserve. Till next week, Gumbo Nation, keep stirring the pot.